Welcome to another edition of How to Build Lifetime Cash Flow Through Real Estate Investing. I'm Rod Khleif, and I'm thrilled you're here. And I know you're going to get tremendous value from the dynamic gentleman we're interviewing you today. His name is Josh Cantwell. And a little quick history. I'm going to have him tell you all about him. But, he started out in finance and financial advising, got his Series 6, 63, 66, and then got into real estate and formed a company called Strategic Real Estate Coach in 2007. He's done about 700 transactions. He's presently in about 2,400 deals, some with some people I know quite well and some of the people that are in my mastermind, actually. And, just got the pleasure of being interviewed on his podcast. What's the name of your podcast?
It's called The Accelerated Investor. Thanks for asking.
The Accelerated Investor. Awesome. Well, listen, welcome to the show, brother.
Hey, thanks a lot, Rod. Thanks so much for having me on. I've been looking forward to this for a long time. We have a bunch of mutual contacts. Had an absolute blast meeting your business partner, Robert, here at my office and building a relationship with him. And it's great to be on with you.
Awesome. Well, let's have some fun today. Let's add some value. So take a minute and talk about your story in your words.
Sure.
Fill in some of the blanks.
Sure. So, my start in real estate was unique in that when I got out of college, I actually became a financial advisor. My dad almost lost his marbles when he paid for this big, expensive college education. And I got out of it and went to be an entrepreneur. I became an entrepreneur at 21 years old, got an internship, and my dad almost lost it when he said, "Josh, I paid for this big expensive education, and now you're going to become an all-commission salesperson in the financial services world. What are you, nuts?" I said, "Well, Dad, I've been watching you. You're my first mentor. You're my first entrepreneurial mentor. You started an employee benefits business, so why would I do anything other than after watching you? Why would I do anything else?" But what I realized, Rob, really quickly was that most of my really wealthy financial planning clients did not have their money in the stock market or did not have all of their money in the stock market. They own real estate. They own buildings. They own buildings with restaurants, multifamily apartments. They own cash flowing rental properties, rehabs, and they were building significant wealth outside of the stock market in real estate. So I took notice. 25 years old, I bought my first duplex, my first quote unquote multifamily property in the Cleveland, Ohio suburbs. We're from Cleveland. Mm-hmm. And since then, it's been an amazing road. We focused on residential and wholesaling and rehabs for a long time. And then I got sick. And I'll tell you a little bit more about that story as we go. But I got sick with a pancreatic cancer that has just an 8% survival rate. I had the same exact diagnosis as Steve Jobs. And I found out pretty quickly that, that disease was a huge uphill battle. And it made me completely relook at the way I invested in real estate, my life on earth, my relationship with my friends, family, my wife and kids. It made me reevaluate everything and completely change from a business perspective what I do with real estate, which we can elaborate a little bit more on today. But as I sit here now, like you said, we've been involved in over 750 residential deals, very transactional. We've made over 400 private lender loans for both residential and commercial and multifamily. And we own 2,400 units of apartments and really two big inflection points. And I think everybody goes through this usually when they're at their biggest challenge. My biggest inflection points for me was leaving the financial services world to get into real estate. There was a huge inflection point on the future of my wealth creation, wealth building, and my relationships. And the second one was getting diagnosed with cancer, and I had to completely reevaluate everything that I did and really understand, first of all, I was grateful to be alive, but also how was I going to rebuild my life? Similar, Rod, to some of the things that you've been through. Like it's in the depths, it's in the abyss that you realize, what am I really here for? What do I really want to accomplish? What am I really doing? And since I've gotten clarity, which was forced upon me back in 2011, life has been an amazing, amazing journey.
Yeah. Wow. Yeah, that's something. I hate to ask, but I have to ask, how are you doing with the cancer at this point?
Yeah, thanks for asking. So I was very fortunate that in 2011, I was diagnosed in September, had surgery in November. My surgeon, Dr. Matthew Walsh, who I still have a relationship with at the Cleveland Clinic, he basically saved my life on the operating table. I had a very advanced pancreatic cancer. It was actually, the tumor was as big as a basketball. It was bigger than your head.
Holy
inside
cow.
of my stomach. It was 12 inches by 11 by 10 inches wide. They took out everything, Rod. They took out my stomach, my gallbladder, my spleen. They took out this cancer. They took out most of my pancreas, most of my liver. They took out arteries out of my leg and had to rebuild the arteries into the back of my liver. I had to relearn how to eat. I lost 50 pounds in 3 weeks. I had to relearn how to eat because all of a sudden my esophagus is connected right to my small intestine. But the surgeon got all the cancer out. So I didn't have to go through any chemo or radiation. And I've been cancer-free ever since. And today, because I have no stomach, the only thing I have to monitor is, my vitamins, my iron, my B vitamins, make sure I get that stuff. But I'm cancer-free and enjoying life and full of energy. And I'm absolutely blessed.
You have children?
I do. I have 3 kids.
Wow.
Juliana's a 6th grader. She plays club volleyball. I coach club volleyball. It's absolutely the best thing outside of my business life. My relationship with my wife is coaching my kids. I have a 4th grader, Alessandra, and a 2nd grader, Dominic, and they're a blast.
Wow. Well, I don't usually get that personal, but when you have something like that happen to you, none of the other stuff matters. That's the only stuff that matters. And thank you for sharing that. That's really amazing. So those of you listening, tell me your problems. Okay.
Right.
So
you missed out on an LOI, you missed out on raising some money, you got kicked in the teeth. Like, it could be a lot worse. Trust me.
Oh yeah. Big deal. This is the stuff that matters. So wow. How do you transition into finance from that?
Well, let me tell you some of the lessons, Rod. Like, if I could,
awesome.
if it's okay,
please,
let me tell you some of the lessons that I learned along the way.
Please.
And I think it really starts with being transactional in business versus investing for the long term. And I realized at that time I'd made a huge financial mistake, a huge business mistake. And I think this is something that a lot of people get into when they jump into single family or they jump into wholesaling, even wholesaling apartments, that they're thinking about the big hit up front. They're thinking about the big cash flow, the big win, the $50,000, the $200,000 assignment fee. I know a guy that got $1 million assignment fee one time flipping an apartment.
Wow.
And I looked at all the transactions I had done. I realized all of a sudden when I was going to all these doctor's appointments and I couldn't go to work, and my wife had just given birth to my son, Dominic, and I wanted to be home with him, I realized, holy cow, like, if I don't get to work tomorrow, which now I can't get to work because I've got to go to the doctors, I'm not really going to make the kind of money that I wanted to make. And so what happened was, almost by accident, Rod, 2 weeks before I went in for my surgery, I bought two properties with 100% private money. I raised private money, some private investors, friends and family, bought these properties. I hired the general contractor to do the work. I partnered up with the guy to do the boots on the ground. And we successfully renovated these properties and flipped them while I was basically in the hospital. What I learned from that was not another transactional deal, but what I looked at was I could control transactions, I could control assets, I could control deal flow if I could control the money. And it was my first real experience in buying an asset that I had thought about holding long term. And I ultimately sold those properties each for a $40,000 profit. And thank God I sold them, because that's when I needed the money the most. Right when I was coming back from my surgery, I didn't really make money for almost 8 months, Rod. Walking away from having a hugely successful business, doing millions of dollars a year in transactions and profits, all of a sudden, no revenue for 8 months. So now how sexy is being a transaction engineer? Now how sexy is it to be transactional? It's not, right? I realized I'd made a huge cash flow blunder, which is I didn't have enough cash flow. And I started thinking, like, how am I going to rebuild my business now? And what I loved about being in the financial services world was I knew that I had struck a gold mine. I knew that real estate investing, I knew that multifamily and cash flow and private money was the key to owning assets. I just hadn't really done it in my business because of the shiny object of the immediate cash that came from doing transactions. And I made that mistake, and I swore I would never do that again. So instead of being on the investing side and just doing that, I became really, really good at raising private money. I became fanatical in 2012, 2013 about raising money. And I knew I could control assets, I can control deal flow, I can control multifamily and single family commercial deals. And I went on to create my own private equity fund. And then from there. But the big inflection point was realizing for most people, they never maybe get out of transactional real estate or out of any other transactional business. Wall Street, they all value businesses based on perpetual cash flow. I realize the businesses that have significant long-term cash flow are the ones that have the highest valuation now.
Highest multiple, yeah.
Highest multiple,
yeah.
Whether it's a tech company, whether it's real estate, whatever it is, they have the highest multiple if they have regular, consistent, contracted cash flow. Mm-hmm. And that's what we have in rental properties. That's what we have in tenants in multifamily properties is contracted cash flow.
Right.
And so obviously real estate offers tons more as far as tax benefits, but I realized, holy cow, it's even though the transactional stuff seems so sexy, it's really not where wealth is truly made. So I would tell your listeners, Rod, listen, I know they're mostly in multifamily already, but anybody who's not there, maybe just getting started, first of all, I want to reassure them that they're in the right place. If they haven't done a multifamily deal yet, they're in the right place because I made the mistake of focusing on transactional single family and multifamily deals, but doing flips, doing wholesaling. I had to be pulled away from it because of cancer to really learn the lesson that we're trying to convey right now.
That was the blessing. That was the blessing in all of this. You got the memo. It took.
I got the memo.
Sometimes the success is a double-edged sword, particularly if someone is super successful in single family, i.e. me. I did 2,000 houses and my dumbass would have gotten a multifamily or really completely shifted to multifamily. I'd be on the back of my yacht right now. Because my story is when the crash happened in 2008, my single families would pull me down. The multifamily it was doing just fine. If I hadn't collateralized. Huh?
That's the way you get through a recession, whether it's an economic recession in the case that you went through or the personal recession, in my case with pancreatic cancer, you get through it with cash flow. Right. You can grow it with cash flow. You can get through it with cash flow. You can stop the bleeding with cash flow. Right. That can only come from owning assets.
Yeah, agreed. I wrote a book and the subtitle is The New Rules of Real Estate Investing, i.e. the new rules, at least for me, is to focus on freaking cash flow. Now, equity value is out the window. But that's an awesome story. And it's funny, I'm a member of a mastermind that I joined called Collective Genius, which is all the biggest flippers and wholesalers. I'm sure you're familiar with it.
You bet.
And even those guys, well, many of them have their own businesses, so they have systems and they have a business. But if they're just if the business would stop without them, they have to go to work every January 1st. You buy multifamily assets and at some point you don't have to work anymore. I've got students that have retired from their core job because their income has surpassed their pretty high W-2 incomes. So awesome.
What I love about that multifamily space, Rod, is you can do big deals, and because we know that the multifamily space is basically one big joint venture, right? You typically have a general partner or key personnel that kind of sponsor the deal, but it is truly a team effort because you have guys that maybe sign as a personal guarantor on a bridge loan. You have guys
People
that
bring
raise
the money.
Capital. Guys that do asset management and things like that. You can specialize in one of those spots. You don't have to do all maybe 3, 4, 5, 6 roles. You can do one. And for me, it's in raising the money. And for me, it's in getting the equity because that's where I came from in the financial services world. And I've got this down now to a science. And I currently manage about $35 million of true private money. So I can write my own ticket now. I can joint venture with the guys that I want. I can do multifamily deals because I decided the place I was going to sit is in raising the capital. So that's how I've become friends with guys in your mastermind. I've done tons of deals with 2,400 units without having to do everything and wear every hat. So one of the things I would pass along is to say, look, being in multifamily, it doesn't have to be overwhelming. Pick the one spot, whether it's finding deals, whether it's doing the asset management, maybe doing the value add, maybe raising the capital.
If you're analytical.
Become really good at that one spot. You don't have to be good at everything. I'm not a great boots on the ground guy. I'm not great at maybe the stabilization or the asset management, but I'm unbelievably good at raising the money side of things. And that's allowed me to get into a ton of deals.
Yeah, there are a lot of people that listen, and I speak about this regularly. The different personality types that get into this business, and they've heard it from me ad nauseum that this is a team sport, and that but everybody has strengths, and yours is raising money. And so, and you know, I've got students that, you know, are very introverted, and they're like, how am I going to do this? I have to build relationships. And I told them, put it out there to the rest of the students. We call them warriors, that you'll evaluate deals for them. And boom,
Yes.
they've got instant connection. So there's a piece, you know, and or raising money, and or, you know, going out there and finding deals. I mean, gosh, if you can find deals, I mean, you're the belle of the ball today, because
That's right.
they're so hard to find. So,
And Rod,
no,
I would
love
say,
it.
look, the one biggest thing is you just have to be calm. And this is what I tell my students and people that I know and that I coach and deals. You've got to become the top of mind reference for real estate by having a niche, right? Niche is rich. You've got to have a niche, but you got to become the top of mind reference, because then whether somebody has a deal, let's say it's a commercial broker, they have a deal that they want to sell, or a motivated seller, or a lender, or an attorney, you've got to become the top of mind reference if you're really good at one thing. Maybe it's evaluating deals, maybe it's raising capital, maybe it's an asset management or construction. But then you just got to get it out there to everybody, because somebody could loan money to you, they could invest equity with you, they could sell you a deal, they could cheerlead for you and refer you to other people who could be on your team. They could buy a building from you, or they could sell a building to you. So there's so many different people that are involved in, like I said, it's a team sport, but you don't want to be a generalist. And that's one of the messages I want to convey to your group is, if you can make that list of everybody that you know and just go show them, educate them about why multifamily real estate, raising private money, is an incredible way to build wealth, and they look at you as the top of mind reference, you don't even have to sell them on an investing with you. You don't have to sell them on doing multifamily. Just educate them about all the benefits. They'll naturally find where they want to play. Do they have capital to invest? They want to refer you a deal. So it really is a relationship game, though, in commercial, no doubt about it.
Yeah, no question. And you know, and guys, you've heard me talk about this before as well, and that is, you know, you're living in the greatest time in history to build reach. It's you can build it free via a podcast like this, via creating a meetup group where, you know, a restaurant asks you to buy a drink or dinner to use their space, and you can become, you know, a thought leader, as it were. And if you're adding, you can do a Facebook group. I've got the largest on the planet now for multifamily. You could do a YouTube channel, Instagram, LinkedIn, Twitter. There's so many incredible free opportunities to build reach and create that team. But the key is what you just said, Josh. Focus on adding value. You've got to add value, and you've got to do it without agenda. Mm-hmm. You know, like when I started my podcast, in fact, I told people when I first started, I'll never sell you anything. I'm a liar now, but I didn't mean to.
Sure.
I never planned to. You know, it's like we hit 1 million downloads. I'm like, shit, I better do something with this. And so I wrote a book and did the courses and all that stuff. But guys, I truly never intended to. And I used to do free phone calls for my listeners, and, you know, I'll talk to you for 30 minutes. And I carved out a lot of time for these free phone calls, but you know, it's adding value.
It's adding reach and value. That's right.
Yeah.
The first thing you have to do in this business is, and I think it's one of the things I'd like to convey, Rod, is people have to be strategic about their time, right? Because it's one of the things we don't have. If you want to accomplish all your goals and give back and have an impact on the world, we all still only have a certain amount of time. So what I did was I became real intentional about finding investors, finding private lenders, finding access to money, because now I could insert myself into a lot of deals. So I became really intentional about, okay, first of all, let me make a list of all the people that I already know. That's a logical place to start, because if you can't get a friend, a family member, somebody within your circle to invest with you, you're never going to have a stranger invest with you. Right. Never. I mean, right. Uber, Facebook, Google, all these companies started with friends and family offers, right? You don't have to go to your friends and family. They don't have to be your first investor, but you're going to have a harder time, right? So that's step number one, is make that list. And you don't have to go ask them for money, but just go educate them about why it's an opportunity. And the second place you talk about reach is find a way to strategically go places where people have money, have deal flow, or want to talk shop. Like, is it the country club? Is it the yacht club? Is it a Facebook group? Is it on a podcast? Is it at a meetup? Is it a mastermind? You have to be intentional about where you go. There's so many different things we can do in today's world. you have to be really choosy about what you get involved in and make sure that, number one, it creates amazing relationships. I'm a relationship guy. I love relationships. That's how I met you, Rod, was through relationships. But you only can have so many. I can't go to every mastermind. I can't be involved in every Facebook group. So which place can you go, add value, build relationships that can also result in business, that can result in transactions?
Right. And what is a relationship? It's nothing more than a friendship. You're just making friendships. Don't overthink this, guys. You're adding value and making friendships, right? Would you agree with me, Josh?
Absolutely. Adding value, building relationships. When I add value, see, I look at money, people's capacity to invest in our multifamily deals or invest in our real estate deals. I look at that opportunity for them to invest and get a great return in a very stable asset, and also, a piece of the transaction, tax benefits. I look at not only, people say, well, what about value? What do you mean by value? But first of all, it's teaching somebody something new, giving them a great experience, having a positive attitude. That's all value. But also value can be, if somebody's a totally passive investor, how can you give them an opportunity they wouldn't otherwise have? Right. People, opportunities that they can't find from their local stockbroker, or they can't find from their local financial planner. And so one of the things I do every single day to create value is I tell everybody what I do in a very cool way. People say, Josh, what do you do? I think you're in real estate. What do you do? I don't say I'm a real estate investor. I don't say I invest in multifamily. I don't say I manage a real estate private equity fund, which I do all those things. What I tell people is I raise capital for real estate. We buy distressed multifamily properties, and we pay our investors a double-digit return.
Yeah.
Why? Because I want them to immediately be thinking back to step number one, how do I become the top of mind reference for them? So when people ask me, if I'm sitting at a bus stop or an Uber pickup or whatever, if I was sitting at my kid's volleyball game, to give you a real example, and somebody asked me and say, especially us guys, Rod, like women tend to have very deep conversations with each other. Men tend to have sort of surfacey conversations about sports, the weather, and then it's, well, what do you do in business, right? It's typically what, guys do. So inevitably, if I just ask another male after we have the surfacey type conversation, total strange person, if I ask them what they do, and they tell me they're a doctor, they're an attorney, they're in medical sales, they're a nurse, they're a whatever, what do you think they're going to do in return? They're going to ask me, well, Josh, what do you do?
Right.
And then I get into, well, I raise private capital for real estate. We buy distressed properties and multifamily properties, and we stabilize those, and we pay our investors a double-digit return. And then almost always they jump in and say, well, how does that work? What do you mean? Like, it totally catches them off guard, right? How does that work? They say, well, it works great. I don't tell them actually how it works, because you got to leave them a little bit of wanting more information. So
that, that can be called an elevator pitch, what you do. It's just telling people what you do. And guys, would you agree, Josh, you better have this memorized so that you don't have to think about it when someone asks you, what do you do? You want to have practiced it on your dog, your wife, your kids, and just be really comfortable in saying it. But I love the fact that you leave them wanting more. So when they tell you, when they want more, say, so how do you segue that?
Yeah. So what people start now is they're like, well, so you're in real estate, double-digit return, and I've been doing this a while, so I have that credibility as well. But people start to really kind of poke and say, well, Josh, how does it work? Like, what do you mean double-digit return? You're in real estate. I said, well, look, and this is where I'm able to immediately diffuse the pitch, because I want to take this conversation. Imagine we're at a soccer game, we're at a volleyball game. Right. I'm meeting with maybe a friend or a family member or somebody new that I met online, maybe somebody that watched this podcast and says, hey, Josh, now I have to think about the rules, right? The legal Securities and Exchange Commission rules of raising private money. If I'm using a 506B exemption, for example, I need to make sure that I'm following the rules. I can't just pitch them my deal. Right. I've got to create a relationship with them. I got to take the conversation offline. So I use the SEC to my advantage. And this is what I would suggest all of your listeners really think about using, is I say, well, look, we invest in these multifamily properties. I manage a bunch of money. We pay our investors a great return. However, the SEC requires that we have a prior substantial relationship before I can really do a deep dive with you on any type of deals or the specifics, because people will start asking me, well, what's the minimum? Well, how do I get my return? And you want to slow roll people. You want to slow roll people. The slower, this is what I found over raising $35 million of private money, which I manage right now. The slower I go, the longer I take until I actually pitch them a deal, the more money they invest and the more often they invest.
Yeah.
So again,
sense.
it's
a little bit of a takeaway.
Yeah, it's a little bit of, you got to be really patient because everybody's like, I've got this multifamily deal I got to fund. I need $2 million to fund this down payment. I need money today. So you got to start building these relationships before you actually have a deal, right? So when I tell them, the Securities and Exchange Commission, this is all regulated by the SEC. I need to make sure that we follow the rules. And the SEC requires that we have a prior existing relationship. So, you know, and we're also here at this volleyball game. We don't really want to jump into it now, but I'll tell you what, here's the key, Rod. Here's my cell phone number. I give them my cell phone number. Plug this in your phone, right? Here's my cell phone number. Go ahead and plug it in. And they'll type it in. And I say, why don't you call me back right now or text me back right now so I have your information. And why don't we get together next week over, you know, a beer or a coffee or soup or whatever, and we can start to build a relationship because the SEC requires that. We can talk a little bit more about real estate. So give them the pitch real quick, totally diffuse the situation. Now, because I haven't pitched them, I have a much higher likelihood of creating a long-term relationship. Because now they think that Josh has something cool that I'm sort of interested in, but Josh was also cool about it because he didn't just throw up on me about his real estate deal, right there. So I use the SEC to my advantage. I take them offline. Now, what else did I do? I also was able to get their cell phone number. I was able to get the most valuable thing, not their business card, not their email address, their cell phone number. Right. And how did I get it? I gave them mine first. So, Rod, I've raised millions of dollars, tens of millions of dollars this way over the last 5, 6, 7 years since my surgery. And I've perfected this down to a situation where now I've got their phone. I've built a relationship in a very short amount of time. I've done it in a very respectful way. Now, if I go to meet them offline, now I can dig into some questions about if they're accredited, non-accredited, have they invested before? I'm done all that. And then I'll get to the point down the road where I'll say, hey, I've got, you know, this is some of the multifamily deals I've done in the past, and they look like this. If I found something like this again, would you be interested in potentially investing? They always say, yes, absolutely, this is awesome, because I've now walked them through some deal flow, walked them through down that road. And now I truly feel, and Rod, this is where it really comes from, the conviction, the passion for raising money or for this business of multifamily investing comes down to this one statement. A friend of mine who's a digital marketer, he's an amazing marketer, he's a student of sales, his name is Francis. Francis said to me one time, he said, you know what, Josh? If you have something that you really feel can provide a lot of value to somebody else's life and they're going to be better off for doing it, you have a moral obligation to sell it to them. Right?
Agreed.
How powerful is that?
No, agreed. You know, whenever you believe that and it's the truth, then you show up differently. You show up
differently.
Yeah, you really do. You show up with total congruency and passion.
That's right.
And that's
so when
what
I feel like somebody can invest in one of our multifamily deals, I'm not just saying like, I want to have them invest in one of our apartments or in my private equity fund because it's all for Josh. It's all for my company. How much management fees can we make? How much equity can we get? How much cash flow we can get? What I really feel like, because I was a financial advisor, I know what financial advisors sell, right? Remember, the average return in the stock market over the last 100 years since JP Morgan founded the stock market, the average return in large cap equities is 9%. In a blended portfolio, which meaning stocks and bonds combined, the average return over the last 100 years, 7%. And a bond portfolio about 3.5%. So if you take that, that's the gross return. Now remember, with stocks, bonds, mutual funds.
Before fees.
Yeah, before fees, before taxes, there's no tax shelter.
Right.
And there's no leverage to be able to get loans. I mean, you can do margin accounts, but that's really, we're not talking about that. You're really leveraging with multifamily and with apartments a real asset. So I truly believe when I present somebody, I think if they don't invest with me, that they are worse off So I have a hard time letting them go because I keep telling them at the end of the day, look, you're going to be better off long term. Not only going to get a great return, but tax advantages, stable asset, cash flow, all these things that, Rod, that you've been preaching about for years about multifamily is so true. But if you really know the mechanics and the numbers behind it, it's so easy to get passionate for. And then if you do it the right way, raising money is a piece of cake. Now, if you got access to money, now you can really have a lot of credibility with brokers, a lot of credibility with sellers to be able to put together an amazing offer.
So are you, just to get technical for a minute, are you using any of your series licensing for this stuff that you're doing?
No, great question. Okay. I get that a lot. I let my licenses lapse all the way back in 2007. And I let them go. So we do have private placements, 506B, 506C that we use. Right. But none of the licensure I used to have.
And with your private equity fund, it invests just in real estate?
That's it. And primarily in the fund, we're primarily doing lending for residential and also small balance.
Okay, so it's for loans. Okay, gotcha.
It's for loans. Right. And then we invest equity outside of that. And we
so you raise equity for deals. And so you'll come in with equity. Are you playing, are you coming in as a fund, or are you coming in just with your individual investors?
Both. We've come in, we've made investments for our fund. I've invested my own personal money, and then we also have one-off investors that go directly into a deal. We've done all of those. Now,
when you bring the equity to a deal are you a GP on that deal, or do you play an additional role, or talk about that?
Yeah, great question. So, I invest with guys that I already know. So I'm not, out just soliciting people. Hey, I can invest in your deal.
Right.
I just like most people in this business, Rod, you got to know
who the operator is and know their track record and trust them and all of that. Particularly if you're going to bring other people's money to their deals.
That's right. So I structure joint venture partnerships up front. So sometimes we're signing the personal guarantee on the bank loan. We're always sitting on the GP side of the deal. We're also, a lot of times raising money for the deal. We also do diligence for that transaction. But we've got one, which is 164 unit, which is in my backyard. We're more involved with that because it's right here. Mm-hmm. And then we've got about 2,000 units in the Southeast, where I obviously don't live there. So I can't be the boots on the ground. So we've joint ventured on those deals with other operators that we have really strong relationships with.
Yeah, and the reason I asked the question is you're doing it the right way, but there are people out there doing it the wrong way. You cannot just raise money for a deal come into the deal. You have to be actively engaged in it. Otherwise, you're breaking the law. Frankly, you can't just raise money.
They look at your equity as essentially a commission for raising money.
Right. And so you have to play a role, be it due diligence, be it asset management, be it investor relations, whatever, and it has to be real. So, and I've had attorneys on the podcast speaking about that. Well, listen, you have added tremendous value about raising equity. And I hope you guys took notes, because your way of bringing an investor into the fold is really very, very powerful. And, guys, he's got a great book if you're interested in flipping called The Flip System. It's getflipsystem.com. And it talks about his story with the cancer and flipping, which is a great way to raise money and make money while you're building equity and things for this multifamily gig.
That's right.
But listen, Josh, I really appreciate you being on the show, brother, and definitely need to get up to Cleveland and have lunch one of these days.
Yeah, we could meet out at one of your buildings. I know you got one down there in Dayton, and the tornado deal.
Just destroyed. It's finally back online with, not completely, but we're finally renting units again. Thank God nobody died and no kids got hurt, but that was quite an experience. Yeah. So we're up there regularly, and I know that's why Robert stopped in and popped in and said
you
hi.
bet. It was great to meet up with Robert face to face. And when next time you're in through town, hopefully we'll make it out to one of your events coming up this coming year. And really appreciate you having me on. I'm so grateful for the opportunity to connect with you and your audience. And look forward to being at your events, learning more, meeting more of your audience and more of your students.
All right. Thanks, brother. It was a pleasure. Take care.
You got it, Rod. Thanks a lot.
See you.
Bye-bye.
All right. Bye.